Hello and welcome back to Money, Mortgage, Moving Out. I'm Sam and this is Pip.
Hi!
And today we are going to be continuing of our episode on tax.
If you haven't already, make sure you check out our other tax episode where we cover the basics of tax, income tax and personal allowance, national insurance and tax relief and allowances.
In this episode we will be talking about self-employment and tax and other taxes worth knowing about. Self-employment and tax.
If you are self-employed, you are entitled to all of the tax reliefs mentioned in our previous episode, but you will have to detail them on your self-assessment tax return.
You have to tell HMRC as soon as you become self-employed, and you have to fill out your own tax return via self-assessment in order to find out how much tax and national insurance you will have to pay.
It is easier to fill out your tax return online, detailing your income for the previous tax year that ended on the previous April. The deadline for this is the 31st of January each year.
And if you have a turnover of over £85,000, you also have to register for VAT.
The difficulty for doing tax yourself is that you have to save enough money to cover it.
To work out how much you are likely to owe compared to how much you are likely to earn over the next year, you can use the self-assessment Ready Reckoner online that we will link down below.
You will have to pay an advanced payment of next year's tax bill, which is roughly half of what you expect it to be. This is due in July.
For most self-employed freelancers, you will use a cash basics accounting. This is where you declare money that you received or spent through expenses, pensions and so on through that particular year.
You need to tot up what you have earned and also any business expenses that are tax deductible. Mentioning any other ways that you have used money that year that may enable you to save more on tax.
This will be taken off your income total, and this is what would be taxed if you have a student loan.
You need to also say so on your self-assessment form, and the HMRC will calculate how much you owe based on your earnings that year.
If you are self-employed, you can claim business expenses, and you can offset quite a bit against tax and save a sufficient sum of money. As a result, these things can be calls you've made for work or your heating bill if you work from home. However, if these are things that you use both for work and your personal life, you need to figure out what percentage of it you are actually using for work. For example, HMRC says that if you use the same mobile phone number for both work and your personal life, you need to divide up your bill. You can claim office equipment, so a new laptop, stationery, postage, printing, and computer software. You can also claim for the cost of an office. So if you worked in a shared office space, you can claim for the rent of the desk. Or if you work from home, you can claim for part of your heating bill or electricity bill, council tax, mortgage, interest, rent, broadband and phone bill. But it's not the easiest thing to work out what of that you are actually using whilst you are working.
HMRC offers a flat rate option called Simplified Expenses, which makes things a little bit more straightforward. This is £10 a month if you work from home between 25 and 50 hours a week, and up to £26 a month if you work 101 hours a month. These don't include broadband or phone bills, you'll have to work these out separately. You can also use flat rates to work out car mileage for work travel of 45p for any cars you drive up to 10,000 miles and 25p thereafter. Use the gov.uk Simplified Expenses calculator to work out if you're better off using the flat rates or whether it'd be better to do the maths yourself. You can claim for any travel you do for work, but you cannot claim for travelling to and from your office. You can claim for any uniform you have to wear. You can also claim for website costs, newspaper and magazine subscriptions, and also the cost of hiring a lawyer or accountant. You need to keep a record of all your expenses for at least 5 years. This includes receipts and bank statements. There are some handy apps and bank accounts that help you file as you go, like Expensify, Starling and Monzo.
If you are worried about what expenses you can or can't claim, or making a mistake on your self-assessment form, you might want to hire an accountant.
Here are some other taxes that are worth knowing about.
VAT. You pay value added tax, or VAT, on anything you buy that are considered luxuries and not necessities. Although this definition is very dubious. VAT is usually hidden in prices of restaurants, shops and hotels across the UK. VAT is currently 20% for everyone. This is why it's not considered as progressive, because those who earn less money end up contributing a higher percentage of their earnings to VAT. But watch out, because some businesses add VAT on afterwards.
Stamp duty. If you're buying a home, you have to pay stamp duty on the new property, unless you're a first-time buyer buying a property under 300,000.
Inheritance tax. You are taxed on the transfer of everything you own to someone when you die. Of course, you are no longer around to pay the tax, so it comes out of everything that you've left behind. There is an inheritance tax threshold of which nothing is owed. This is currently £325,000 and is called the nil rate band. If your home or assets are worth more than this, everything you own is charged 40%. Tax is charged on anything above at 40%. Married couples have a combined £650,000 nil rate band as long as the first of the couple gives everything to their spouse. You can give people money, but they will be charged inheritance tax if you die within 7 years.
Capital gains tax. You pay capital gains tax, or CGT, when you sell an asset that has increased in value. The gain in value is taxed at 28% on gains from residential property and 20% on other assets such as shares if you're a higher rate tax payer. Everyone gets a tax-free allowance of up to $11,700 for CGT, so you only pay it on gains above that. The most likely reason that you'll pay CGT at a young age is if you own more than one property. You do not pay CGT on your main home, but you will pay it on a second holiday home or a buy-to-let.
We hope you have enjoyed this video.
Like we mentioned before, if you haven't already, please check out our first half of the tax episode.
Also, we would really appreciate it if you could like and subscribe down below. It'd really help us out.
And also make sure you head over to our Instagram and TikTok to see what we're getting up to over there.
But for now, we'll see you next time.
Much love!